Hello, ladies and gentlemen, and welcome to our interview with Mattheus Riolfi. Mattheuss is a co-founder and CEO at Tint, a Y-Combinator alum and insurance nerd. He is also an angel investor. Mattheuss is working to disrupt the insurance industry by empowering tech platforms to protect their users from inherent risks of using their products and services. And he is doing this by embedding insurance directly into products and services. So Mattheuss, thank you for joining us today.
Hi, Boris. Thank you so much for having me.
Absolutely. It's great to hear you, to have you here. So my pleasure. And Mattheuss, could you tell us a short story about your career path, what brought you to where you are right now, and what you guys at Tint are up to these days?
Absolutely. So I was born and raised in Brazil, and I came to the US about 11 years ago to go to Harvard Business School. And the reason why I came is that I wanted to launch global businesses. And I thought that here there was the best place in the world to do that. And then I moved after business school here, so now 9 years ago, and I joined this startup called Turo, which at the time was a 15 people company when I joined it. Turo eventually grew to become the largest peer-to-peer car sharing platform in the world. And by the time I left 4 years ago, they had over 400 employees and was like a multi-billion-dollar business. And I led international expansion and I ended up spending 80% of my time finding insurance products so Turo could exist, because in order for Turo to facilitate strangers to share cars, they had to solve auto insurance, because traditional auto insurance policies do not cover commercial activities. So because I ended up spending 80% of my time, I could see how, or two sides of the same coin. First, an opportunity, like how a tech platform based out of San Francisco was becoming effectively an insurance company behind the scenes. But I also saw how hard it was, because Turo had to run this insurance company without having the tools, without having the appropriate people, without have all the access to capacity that they would require to do that effectively. So I team up with my co-founder, who was also working at Turo, and then that was our inspiration to start Tint. We create Tint to make sure that the next Turos, the next companies that are working on their own insurance products, don't have the same journeys. The life is a lot easier for them. We believe that insurance and a lot of different insurance use cases will become a feature of bigger products. They will no longer be created and distributed as a standalone products, because many use cases the consumers don't need that much explanation. They don't like to purchase insurance as a standalone product. So Tint is really empowering, creating all the tools to empower those non-insurance companies to operate their own insurance programs that reduce risks from their core business and have them grow faster and have them make like a higher margin.
Mm-hmm. Fascinating. So I believe that we will have a very thoughtful conversation on what embedded insurance is all about, and what types of companies can really benefit from this intrinsic embedded insurance, and maybe some also with some actionable tips. From my point of view, I recently had some experience. I don't know, is it called embedded insurance, but when I was booking a trip like via booking.com, I did also book the car, and then they pop up screen, if you want to buy insurance. I said, why not? Then I bought this insurance, but then when I came to this car agent, they didn't see that I have got insurance. They wanted to sell me their own insurance. So it's kind of a difficult situation. And I kind of finally had to buy his insurance, but then he compensated me. So it's kind of maybe it's not solved yet. So you have your company have a good business case to solve it.
Yeah, you're right. If you think about the travel industry has been doing their own version of embedded insurance for a while, right? Like car rental companies, to your point, sell protection and insurance. Airlines have been historically trying to sell you travel insurance as part of their booking flows. But what we're seeing is that the same logic is now has propagated to many different industries, to shipping, to vacation rentals, to cryptocurrencies, to now car sharing, home sharing. So everywhere you look, think about Apple with Apple Care. Like everywhere you look, you see companies, large and small, that are protecting their customers with their own products. And you're right that what the first wave, let's call it, of embedded insurance was very low. We use very little technology other than just displaying the insurance and let you purchase online. But this information doesn't flow to different parties. I think what we're seeing now is that technologies like Tint, what you can do, the types of products, the types of data and granularity that you can get those embedded insurance products has now grown exponentially.
Yeah, interesting. So in addition to offering protection to their users, how do companies benefit from embedded insurance?
So embedded insurance benefits the companies in two major ways, right? So the idea is that every company, let's say getting a shipping company, you're a marketplace that let users ship items, and then you connect them with carriers, for example. So suppose you want to ship your car somewhere. The activity of shipping has risks, right? And one of the main risks is that physical damage to the vehicle, to the property you're shipping. So that, in a way, it's a risk that many times can prevent users from shipping cars, because they're like, well, what happened if it gets damaged? And like they end up not using the service. But imagine this marketplace now puts forward let's call it shipping protection solution, when they say when you ship with us for an additional $10, or you name the price, your car is fully covered against any risk that may happen there. So in that case, like the company has addressed this major barrier for usage of the core business. So the first benefit is conversion increases, but there's also a secondary benefit, which is they can increase their margins, right? So now they are collecting $10 for that transaction. Obviously, there will be some money paid in losses and in claims out of that. But if the company is running this program effectively, they'll have a profit. And depending on the industry you are, that profit can be a significant portion of the profit of the company, right? So what embedded insurance really does is like it helps risk, where it's traditionally a cost center, to become a profit center. And that can be mission critical for risk professionals, because now they're gonna be part of a profit generating operation.
Mm-hmm, mm-hmm. So for risk managers, what is important to understand in this particular solution? And can you perhaps give some example? What questions can they ask themselves to figure out if they could benefit of service like yours?
Yeah, absolutely. I think one of the core questions to ask is, what are the main pain points that our customers face today, and why they're not using more of our product? Again, for example, on the shipping example that I mentioned, the pain point could be, well, I feeling uncomfortable by shipping an item and I don't without protection, right? So if whenever the companies, and we see that over and over with our customer, like whenever the companies can identify what are those risks that are intrinsic to their core business, they can it's very likely that they can flip the table and create protection and insurance products that will address this intrinsic risk, but it will also help with monetization. The other, in the shipping example, let's know other questions that they can ask. So the first one, what is the main risk? Well, so let's say the main risk is damage, but what are the other risks that those customers are facing? Suppose the customer is a company and is shipping something to a supplier, to a consumer. Another big risk here is like delay, right? Like what if the carrier doesn't arrive on time? depending on the contract you have in place, you may have some fees associated with delays, even though you don't control, it's the carrier who controls. So that's another good example. Like that could be probably be included in some sort of protection that would say, okay, if your delay, you have a shipment delay and you have any fees or something, we'll pay back. Or how about return items, right? If the customer returns, then you have to pay the shipment back. Like, so this is a good example of how a risk manager can use the same frameworks, the same tool that they already use for identifying the risks of the business and mitigating, but now they go one step beyond and they create protections that will accelerate their core business.
Mm-hmm. Yeah, okay. Of course, insurance industry is kind of old and a little bit. Sometimes it looks like a boring industry. But I would like to ask you a personal point of view. What is the commonly held belief or misconception in the risk industry that you are strongly or even passionately disagree with?
I disagree a lot about how insurance is seen because I am passionate about it, and as I mentioned, started my career and got into insurance by accident when I joined Turo because I had no idea I would spend so much time with insurance. But here I am, almost like a decade ago, because I really enjoyed it. And I think the first misconception is that insurance is boring. I think it's far from it. I think especially with embedded insurance, this new way of having insurance as a feature, not a product, really changes the industry. It changes how products are manufactured, how products are sold. It changes who is involved, right? So we're talking about the risk managers here. The risk managers in this new embedded insurance world, they become product owners in a sense, right? So before they may be buying some insurance to cover some corporate risks. Now they can operate or or lead some of those insurance products, which is very different from what has happened historically in the market. And the second misconception, I think, is that insurance is a cost center. That is also not true. I think, as I mentioned, I mentioned Apple, Turo, my former employer. There are companies like U-Haul where most of their profit it's coming from insurance. Like the car business of renting vans. U-Haul is an American company that rent like vans and small trucks to people doing moves. Like a significant portion of the profitability comes directly from the sale of insurance. So that misconception that insurance is it's a cost or has to be a cost center is absolutely not true.
Mm-hmm. Interesting. So maybe without dropping the names, so what something your team or have recently achieved that you are really proud of, just to understand it?
Yeah, so that's a great question. We I mean, something we achieve and it's public, like and just shows what the breadth of this embedded insurance revolution. We work with a company that's public called Deal. So they basically help companies hire contractors abroad. So if you want to hire a software engineer and say in Romania, they provide all the compliance, the payments, so you can do that in you can do that in the right way. So we worked with them to create what's called misclassification guarantee. So basically what they're saying is like they're telling their customers, we understand your core business, our core business, we understand the contract so well that we write them in a way that there's no risk, or very, very little risk that your contractor can sue you for misclassification. So they worked with us to create a misclassification guarantee that basically says, if this contractor sues you because of misclassification, we will pay up to $20,000 or $25,000, depending on the case. So that's a great example of there wasn't like a risk that is intrinsic to their business, like companies being maybe not using their products because they were afraid they could be exposed to misclassification. But then they create this guarantee product that say, basically, I'm taking this risk away from you. And they could, quote unquote, underwrite this risk well because they they know the contracts, right? They have lawyers in every single country, like analyzing the labor laws and make sure that those contracts are compliant. So I'm very proud because there was a very innovative use case, and again, it shows how risk managers in any industry could be thinking about ways to address those intrinsic risks with protection.
All right. So let's discuss your startup journey, because you're a young entrepreneur. You've been to YCombinator platform. It's kind of great kind of potential. Means that your company has great potential. But what is your approach to innovation, and what unique insights have you discovered through your startup journey?
So our approach to innovation is to, I'd say challenge everything, right? Like challenge every assumption. It doesn't mean they are all wrong, but we look at the industry and we always ask, why is this a certain way? And then I think that's a good way of like finding places where you can change and doing things differently. And this is not an original idea. I think there was a famous quote by Steve Jobs that says that the world was created by people that are not smarter than you, in a sense that, like, there's nothing that in how the world works that it's necessarily right, like, and so we approach that, and insurance is definitely an industry that has not in many ways evolved as fast as, say, other industries around it. But obviously there is a reason for this as well, which is compliance and regulation. So we take that, we take the same question with a compliance first approach, in a sense that we will, as much as we want to innovate, we want to make sure that whatever solution that we're doing meets the compliance and regulatory requirements, because that's one of the main changes of being a startup entrepreneur in the insurance world or finance or regulated industries, versus if you are just building software for a SaaS platform, where then it's a lot easier. And something that we learn in this journey, I think, is that the innovation, for the reasons I mentioned, innovation insurance, it's hard, right? So we learn, in a sense, that, like, there are a lot of great and smart people working and trying to push things forward, and the speed may not be what people would like and hope, but is just because kind of how the regulations, how those things work. So I think we're definitely trying to push the boundaries as fast as we can while understanding those limitations.
Mm-hmm. All right. Maybe one more question about your startup life. So you recently raised your Series A, right?
Yes.
Okay. So what is the experience like, and what advice will you give to other founders looking to raise in this current environment?
Yeah, well, fundraising is always stressful, and especially in this environment, right? So we were lucky that we raised like in the tail end of before the current kind of crisis and adjustment. But so fundraising is always challenged. I think it's definitely going to be even more challenged now. So my advice to founders is, which is what most VCs and founders are talking about, is like, how can you become default alive, right? Like, how can you look at what you're doing today and think about your margins, your unit economics, your burn rate, and reduce as much as you can, so you don't actually have to raise money now, or you raise money from a position where you don't really need the money, right? One of the unfortunate realities of venture is that the easiest time to raise money is when you don't need money.
Yeah, exactly.
It's unfortunate, but it's absolutely true. So as founders, like, how can you reduce burn, extend your runway, so you don't have to do it now, or maybe you can even reach profitability, and then you go raise. Like, that will make your life a lot easier.
Fantastic. So if we go back to kind of insurance world and your solution, what do you think the insurance industry is as a whole is heading? Where do you think it's heading? What are the trends and what should we expect from you guys in the future?
The insurance industry is heading towards a lot of transformation, and I think that the incumbents or the larger companies, obviously, they don't have the most incentives to change, but I do think that the world around them is changing so rapidly that that's going to be inevitable. So, for example, embedded insurance is definitely one of the big trends. So, if we believe that insurance will become a feature, that changes a lot of the manufacturer of insurance distribution, the players that we talked about. But there are other mega trends like the use of data and more granularity for underwriting. So, for example, Tesla, they're now creating their own auto insurance products that are they are leveraging the data that comes from cars in real time, and they no longer pricing based on gender, age, or like some basic factors about the person. They can price and have rates in real time, depending on how fast you're driving, what's the weather around you, what is the time of the day, right? How busy is the road around you, and like the things like that. So that kind of granular underwriting. AI is another big topic that I don't think it's going to happen overnight, but like the usage of machine learning models, more sophisticated algorithms to do pricing, I think which relates to the data argument that I mentioned before. I think those are all big trends that won't happen overnight for the reasons we talked about. Insurance change is a bit slower than in other places, but they if we look forward in 10 years, they're going to be there. And your last question about how we are going to evolve, we want to be the main company powering this embedded insurance revolution. Like we want, if you fast forward 10 years when a lot of the insurance use cases will be purchased through products and services that people use, we want to be the operating system that's going to be behind the scenes powering all those products.
All right. Wow, very ambitious. So if we summarize it, if someone who is listening to this interview would like to walk away with one or two major takeaways, what would that be?
I believe the major takeaways are that, one, as a risk manager, embedded insurance gives you a unique opportunity to create profit centers in your company. So from being a cost center and a reactive part of the organization to an active profit center that is pushing the margin and the core business. And I think that is a once in a generation opportunity, I believe. And the second one is that insurance is changing, right? The pace of the change is accelerating. So I think it's very important for all the insurance professionals to be aware of those changes and to adapt, because probably the way the industry works in 10 years is going to be very different than today.
Fantastic. So I have one question. I ask this all my guests because I'm running global risk community and the community of risk managers and compliance managers all over the world. And I will ask my guests normally, how can we at global risk community contribute better to understand this complex world of risk?
That's a good question. I think that the global risk community has a unique view on what's going on in the world. What are the risks? So, for example, cyber being one of the big mega risks or that's emerging today, right? As the economy goes more digital and more of the information it's stored and in a way at risk, and the stakes for mistakes happen. So I think the global risk community can absolutely kind of help shape the conversation on what are the threats, what the threats that they're happening, and how to mitigate and frankly take action, right? Because I think, it's important to start a conversation, but eventually you want to see action. You want to see more companies, the example of cyber, more companies getting protection, getting the SOC 2 or other certifications are doing more. And I think the risk managers will be the main players to make that happen, right?
All right, fantastic. Thank you very much. That's very important. We will take it into consideration. So, Matthew, thank you for this interview. Perhaps if you want to add something, if I forgot to ask you a specific question, please just go ahead.
Yeah, no, I think we cover most of or all of the important points. I think it's definitely a very exciting time to be working in this industry. So yeah, I'm glad we talked, and I hope that that was useful for the risk managers in different parts of the world.
All right, fantastic. I wish you and your company Tint a great success and actually achieving what you have in mind to be a major point of insurance, embedded insurance in the world in 10 years. I will be back and ask you for your upgrade of your information. But in serious, maybe we can come together in a few months and discuss with you another topic on our podcast.
Absolutely, it will be a pleasure. And I think we should. You mentioned you're in the Netherlands. Maybe we can have a coffee in Amsterdam in 10 years and talk about like how things evolved from there.
All right, Matthew. Thank you very much.
Thank you so much, Boris.